Good morning. My name is Paula Kurday, and I am your motivational money maven. Our chapter today is brought to you by the Elevate Together community. This is a community of like-minded individuals that come together to share knowledge and to make sure that we are all sharing information that has helped us build our wealth, become healthier, and that creates a community of positive impact. So over the last several weeks, we have been talking about wealth building, and we've referred to our wealth building in different categories, including health, spiritual, emotional, and financial wealth. So my contribution, our contribution, is to the financial piece, depositing knowledge for people to be encouraged that there are systems, that there are ways to recreate the financial wellness that exists in your home, and that you can create new habits in order to create the wealth that you would like to have. So some of the things that we've been talking about is debt management. We've been talking about savings vehicles. We've been talking about ways to create more money, save it, invest it. Some of the things that we've talked about include some of the biggest threats that we should consider to wealth building is procrastination, loss, inflation, and taxes. So those are some of the things that we really want to consider. One of the biggest questions that we have is, as we're building wealth and creating a secure future while maintaining a secure present, is what habits do we have in place that are helping us build this wealth, to create more, to have what you need to have in your household, to have peace of mind. So one of the questions that I really want you to consider is your wealth going to last as long as you do? And if you do not know the answer to that, I urge you to set an appointment. Call me, call your financial professional, and let's make sure that you know how to answer that properly. If the answer is yes, congratulations. If the answer is no, or I have no idea, I urge you to sit with somebody, because by the time you get to retirement and you figure out that the answer is no, it may be a little too late. So today I'm going to introduce you to two of my favorite women in the whole wide world that I get to play with and that I get to work with. They are just absolutely amazing. Recently, you guys met Hillary England, and she helped us talk about some of the investment vehicles that are available through work, through just for people that are working and that want to invest money. So she's back with us again today to share some of her thoughts, some of her wisdom and knowledge on life insurance and why it's such a powerful vehicle. Hillary is a mom of two beautiful daughters. She's married to her wonderful husband, Mike, and she is just a giver from the heart, believes in supporting people and creating positive impact to the community. So Hillary, welcome back.
Thanks for having me.
You're welcome. And then we also have my dear friend, Carrie, who is an amazing powerhouse. Her heart is just amazing when it comes to educating people, to providing people the one-on-one service that is tailored to what you need. She meets you where you are and creates a plan so that you can feel that you have superpowers by the time that you're done working with her, because she imparts that in just listening, helping you, coaching you through what you need as far as your financial profile. And I don't know, she's just magical. She's artistic, she's giving, she's loving, and she's one of those people that you want to have in your corner, as is Hillary. Our entire team is here to support you guys. So if you have not found somebody, these ladies are some of my go-to women when it comes to supporting anybody in our community that needs financial knowledge and financial literacy. Carrie is engaged to a wonderful man, Greg, and these two are a powerhouse of knowledge when it comes to building wealth in multifaceted areas in your life. So I'm super excited to bring Carrie on today. Carrie Bowman, thank you for joining us this morning, and we appreciate your willingness
Absolutely.
to share. So
Thank you
ladies,
for having me.
You're welcome. We are super excited to get started. And guys, we've been talking about different vehicles, not only for investment, but also vehicles that will help you create good habits in your life and that will help you create wealth at a different level. So we're going to kick it off this morning and talk a little bit about why life insurance. I'd love to hear a little bit about your experience as agents, a little bit of your experience as what you've seen in your career, that the positive impact and possibly even the negative impact of people choosing to participate in programs that offer life insurance. Carrie, you want to kick us off?
Sure, sure. So I have been assisting people with life insurance, and I say assisting people because you're going to find this is not a good fit for everyone, and that's okay. For like 12 years now, and so it's been a long time to ride that train and to see both sides of it. I started my career 3 months into my career. I had my first death claim, which is very strange for someone to have happen early on. I didn't know that they'd call the agent first when that happened. So it took me on a journey of growth with that family that I wasn't anticipating. And it tugged at my heart how important life insurance really is. On that side, a death claim, this was a child that passed away. So my children were just a little bit older than this child. So you can only imagine how this impacted me as an agent to go back to that family, to be at the funeral, all of that. It changed my life. It made me see a different side of life insurance, as an agent that I wasn't expecting to see maybe for 10 years into my career. So, in that way, I feel like I know what the value is on this and how it does make a difference. And I tell people now, nobody wants to put their loved ones that they leave behind in financial and emotional turmoil at the same time. We cannot bring someone back, and we cannot, we can't make the blow better with the person passing on and leaving this earth, but we surely can make it less stressful financially. That burden, all the bills, how things are going to get taken care of. So that's one side of life insurance, right? The other side of life insurance is really exciting. I tell people it's like, you don't have a crystal ball. You don't know what's going to happen from year to year to year. Things happen in our lives that it's a curveball. We don't know it's going to come. We don't know what's going to happen. It might be we need new tires on the car. It might be, oh my gosh, my kid got accepted to this amazing college, but we're going to have to supplement $8,000 for him to go to Harvard. Oh, how are we going to do that? And with the proper vehicle built properly, the liquid asset of living benefits life insurance is amazing. It's amazing. It's one of the only vehicles that you have access to without a penalty anytime you need it. So it is a safety and security, with that opportunity to look at, okay, what do we have access to that's still going to grow at 6 to 10% a year? It's a no-brainer. So for me, there's two different conversations to really have about life insurance and about what can it do for you? Well, since none of us have a crystal ball, even though some of us are pretty tapped in, but none of us have a crystal ball, we might need access to funds between now and when we retire. Most people will say, well, yeah, there's going to be something that comes up in life that I might need or want access to money. And I might want to leave a legacy to my family, right? So to me, the life insurance conversation, especially as a financial tool, is a very exciting conversation. There's not a lot of vehicles out there to save money in that you also have as a liquid asset, meaning you have access to it when you need it. Living benefits, meaning when you're living, not waiting and for you to die. It's not death insurance, right? But it's also something that if you plan, you can actually withdraw at certain times. Maybe when you're sending your kids off to college, maybe when you know years from now a daughter's getting married. You know, these are things, down payment on a second home. I mean, I've done all of that with people. So that's exciting to see that people can save money and it can grow safely and they have access to it. What a bonus, right? So my experience has been kind of a wide range where the pendulum really swings with life insurance. And it's been a huge part of my life for many years. And I'm so grateful to have access to what we have access to now, Paula and Hillary, where we can really aid people in their financial portfolio with life insurance. And it's a whole different conversation. It's an education piece altogether around what are the differences. And a lot of people haven't been exposed to the kinds of portfolios that we access and the way that it can really aid in your whole financial picture. You know, it's one really good piece of the puzzle that people really should consider having in their portfolio for finances.
Excellent. Thank you. Thank you. We'll come back with a couple questions. Hillary.
Yeah, I really resonate with Carrie. So I was in a very similar position. So when I started, my first claim came within about 6 months of me starting. And it was actually for a family member of mine. And I had to kind of help not just my family maneuver through that, but myself as an agent as well, because it was the first one, right? The first death claim is always, it always sits with us a little bit deeper. But to have it be for my family member, it was a lot to take in. So for me, it really opened up a whole new side. It showed me how little of education people are given when they sit down to get life insurance. So for me as an agent, it really opened my eyes to say, okay, well, when I sit down with you, I'm going to go over life insurance as a whole, what you can do with it, because too many times I think it's underutilized. So from a lot of what you were saying, that's kind of how I've addressed my career is, are you underutilizing all of your facets that you have access to, right? Like, why is it that we are so well versed and educated in, you know, what we're going to do in our career? We spend a whole lot of time educating ourselves on what we want to do to help other people, but we don't take that time for our family. And I say that as like an individual who has had life insurance, and prior to helping others with life insurance, I see now the bigger picture, right? Understanding, I think it's important for us to sit down with our beneficiaries and talk to them, because I've seen what it is when people have life insurance, but then their beneficiaries have no idea that they're the beneficiary, or they know they're the beneficiary, but they have no idea who the policy is with. They don't know where to start. They don't know what to do. And it does cause a lot of that financial turmoil, in the sense of feeling like you're already this emotional whirlwind because you've experienced the loss, but now you also feel physically lost. You feel like, I have no idea where to start. I have no idea where to begin. So it's a whole lot for people. Then I've also seen the other side of it, right? Where they have had it and they didn't pass away, but they've been able to utilize the living benefits, like you said, right? Not just the cash value to it, but they've also been able to accelerate one of the riders that were on their policy. And I've seen the other side of that, where they had the rider on their policy and they should have had access to it, but then their agent never met with them. And because their agent didn't meet with them on a yearly basis, they weren't able to utilize that money, and instead had to end up draining money out of their 401. And they ended up using all of it. So it's really important for me as an agent to say, when I tell you I'm going to sit down with you every year, it's important that we do so, because month to month things change. Month to month could mean somebody gets a critical illness diagnosis. It could mean a matter of life and death. It could be somebody was, pregnant, now they've had a child, and if that child isn't included on their child term rider, if something happens, well, now we don't have access to that, even though you're paying for it, because your child is not added to your policy. So it's a lot of these things that I think we just need to educate everybody on and say, do these things not because, we want to get as much as we can out of you. No, we do this for your family, for your protection, to help you. Because if I'm not doing it and Carrie's not doing it and Paula's not doing it, is your agent doing it? And if they aren't doing that, then you need to get with somebody that this is important enough for them that they're going to hound you and say, meet with me every year because of the experience, right? It's like I tell my kids, I don't give you these rules to take away the fun. I give you these rules to keep you safe, to keep you protected. So that's my job as an agent, as your friend, as, even family. I'm here to protect you and help you and keep you safe. And I can only do that if you work with me. So
So true. So true. I think that great perspective, great points. I think part of the consideration for most people is that there's such a taboo around finances. However, there's a bigger taboo around life insurance. When people hear life insurance, it's like, oh my gosh, I need it, or no, get away from me. However, I feel that part of that is either one of two things. They've had a really bad experience with somebody that has presented the wrong product for the wrong reason, or they really have no idea. We talked about this last week. It's either a no, N-O, or a K-N-O-W. I need to know more in order to look into it. So when presented with life insurance topics, part of what we're looking at is, why do I need life insurance? Like, what's the big deal, right? One of the things that I do want to say about this is that you're not spending money. Like when you go to a store and you buy a television, or you go to your daily coffee brew place, or you go and spend money on things that you are going to consume and then lose their value, life insurance does not fall under that category, and neither do your investment vehicles. You're investing in yourself. You're investing in your future and your well-being. Yes, you're taking that money and setting it aside. However, it's an investment versus an expense. Can they be in the similar category? Possibly. And there are many people that talk about trash life insurance, right? And basically, with those plans, one of the things that we look at is that people have chosen to purchase the vehicle. And the question that always comes up is, what's the least amount of money that I can put down to have this product? Right? It's like you getting a membership to the gym and you're only allowed to enter the lobby, yet you cannot use any of the equipment or use any of the facilities other than just getting into the lobby. Like, who wants that? Not me. I'll just stay home. The
same.
honest conversation is, are you ready to enter a relationship where you're investing in yourself, creating peace of mind, protecting your family, and protecting yourself? So before, we jump into some of the other concepts, part of what I do want to share, and as an agent, when I very first started, I had the opportunity to sit down with my husband and say, hey, I'm going to break it to you. After 25 years of being a speech pathologist, I have the spiritual calling to go into this field of finances. And he was like, okay. He said, how can I support you? I said, I want you to listen to my presentation. And when we're done, let me know what you think. So by the time we were done, he said, I'll take that life insurance thing you were talking about. He said, set me up. I don't have one. I've never had one. However, the way that you stated it, I want to support you as your husband. However, it seems like a pretty good idea. Mind you, my husband has been 175 pounds. He's 5'9", doesn't like junk food, generally healthy, had just had a physical. Everything looked great. Little did we know that 2 years later, he was going to have a massive heart attack. He flatlined 6 times. And at that time, I mean, my biggest concern was his survival. Like, how do I pray and hold that space for him to just live? I had no concern with the finances at that moment. And I was quickly reminded that I had left my job where I had medical insurance and my insurance had expired 2 days prior. So I had no medical insurance because I was jumping into this fun adventure, which was a spiritual calling. Well, he made it through the hospital. He was able to recover. He was home after 8 days. And the beautiful thing of it was that we were able to call and activate the living benefits on his life insurance policy. That allowed me to stay home for 8 weeks without having to worry about going to work. It paid our mortgage, it paid our groceries, and more importantly, it paid all of his medical expenses. We were paying an average of $3,000 to $4,000 on medication for him just to cover the medicine. That didn't even cover doctor's appointments, right? So I'm saying all this to share with you guys, for all of you that are hesitant about life insurance, does it work? We are a walking testimony that the peace of mind that was brought into our household was beyond anything we could measure. We could have cleared all of our retirement accounts and taken care of all of those bills with the cash that we had and the investments that we had. However, right now we would be starting at zero. However, because he made the brilliant decision, number one, to support me, number two, to protect himself and his family, we had that opportunity. And this happened in 2017, you guys. So it's taken me this long to share his story without just bawling. Every single time I've shared it, it's been an emotional experience for me. I think mainly because I've come from gratitude at a level that I've never experienced before. So grateful that as a family, we took that decision, and so grateful that a program like this exists that protected my family. My children are little, and I didn't need to be taking another job or having that stress. Like Carrie talked about, you go through the emotional grief about what's occurring and what the emergency is, and you go through the emotional grief of where's the money coming from? Yet if you properly prepare and you have the right vehicles to activate at the time of a situation such as this, there are no words that really can encompass that peace of mind. I really felt like this divine intervention came in and said, I got you. Right. And so that allowed me to focus on helping my husband rehabilitate and get back to normal, instead of saying, okay, well, I'm going to be stressed because we got to cash everything out. So with that, I want to talk about the difference, Carrie, between a permanent life insurance versus a term life insurance. You want to kick us off on that one?
Sure. So one of the things that I like to do with all of my clients is do a real education piece around the different kinds of life insurance, just like you're asking, Paula. And because life insurance has had such a bad rap, I mean, let's be honest, someone's either had a positive experience, but they still probably know little to nothing about what they have and why they have it, or they know nothing about it. And they're deterred from it. So, it's important to know the different kinds of life insurance and why those life insurance policies were created. So term insurance is a temporary insurance. It's going to terminate. That's what term stands for. It's for a term. So 10-year, 20-year, or 30-year term. You also have a term group insurance through your employer. So if you were employed somewhere, let's say your husband works at Microsoft, they have a group term insurance that his name is on the list of, 500 people. That's a group term. The term is during your working years. So while you're employed at Microsoft, right? So when people buy into a term, it is the cheapest, most inexpensive form of life insurance. And there's a reason for that. It was actually designed to cover large amounts of debt for a term of the debt. Meaning, if you have a 30-year mortgage, you can get a 30-year term. It'll cover that mortgage. So God forbid you or your husband pass away. You can pay off the house so that you can still live there and not be stressed about the debt, right? So that makes sense. The problem is we've been misusing term insurance all these years. Now, let's say husband or wife has a business and you want to cover business debt, that makes sense to have a term insurance policy. Or worst case, that's all that's affordable for you. Fine. Anything is better than nothing, but you are renting that policy. It is money that's going out the window that you're not going to get back. So let's use this as an example. Let's say you're putting $15 or $20 a month, let's say even $30 a month into a term insurance policy that's a 20-year term. You do the math on that over 12 months, which is 1 year, and then 20 years, whatever that dollar amount is, you're walking away from that money. You have to be okay with that. You are renting that policy. It is not a permanent policy. It is a policy that's only going to serve you during the term, 10-year, 20-year, 30-year, during your working years. So people think that that's going to be there when they die, but the chances of them dying in the term are less than 3%. It's very low, right? Generally speaking, when that term ends, the cost of the insurance goes up because the age goes up. So these are all pieces. When people start to figure out, oh, I'm renting my life insurance, well, they probably aren't leasing their car, not most people, and they're probably not renting their home. People want to know they can own and control something and have it there when they need it. So a permanent life insurance is very different. You're going to pay more per thousand for life insurance on a permanent coverage based on your age. So upfront, it's not apples to apples. You can't even compare the two. True permanent life insurance built properly that has cash value building in it means you always have access to the cash value in your policy if you needed it for an emergency. If you don't need it, it can grow and build into legacy money, which is amazing. With a permanent life insurance policy, what happens is this policy is something you own and control. It's not connected to your employer. It's not connected to the state or country you live in. It's not connected to if you, God forbid, get older. We're all going to get older, you know, or if you get sick. Once you qualify for this kind of living benefits life insurance policy, it stays with you until you're 120. So now we're talking about money we can't outlive. That's exciting. Now, it's not apples to apples. This is apples to oranges. You are going to spend more on a policy like this. It is an investment with yourself, but it is something that by far is going to, if it's built properly, you get it at the right ages, meaning not like a year before you retire, your family and yourself will always get more money out of a plan like that than you ever put into it. And that's how you know you got the sweet spot. You got it at a proper age and it was built properly by your agent. So oftentimes when we go through and explain these different policies and we find out what might fill the need, most people have never even been taught about life insurance. And so that's why it has a bad rap, because those people that haven't spent the time to educate are doing a disservice. So I would encourage anyone that's, listening to our call today, if you're not getting the education piece you want around it, you're with the wrong agent. Like, find someone who will take the time with you, because it's important. It's important for you to know that this can be a great piece added to your portfolio. And there are proper times to use term insurance, but the problem is it's overused and undereducated. And so hopefully that kind of rounds it out there, Paula, on those two.
Perfect. So we do have a question. Can you access the money for non-emergency situations at certain times or eventually?
Good question. So you can, so long as there is cash value built into the policy, and that would be a case-by-case situation based on your age, how quickly cash value builds in a policy. And I like to be clear about this. When I actually build a policy for someone, and both Paula and Hillary and I, we custom build policies. This is not a cookie cutter or anything, just so you know. We gather information and we hand build these policies based on the person's need and what they foresee in the crystal ball, right? Like, we don't know, but what we think they may need the money for. But it takes a few years to build cash value in a policy. You have to think about it this way. You are paying for the cost of life insurance up front, the first 3-4 years of the policy. So you're not going to see cash value at all in the policy those first 3-4 years. Now, after that, let's say 6 years into the policy, you're going to see cash value. So let's say, for instance, you needed to borrow $5,000 from the policy, but your cash value is only at 3. Well, you can only take 3, but you never want to completely exhaust that cash value, because if you do, now you've pretty much voided your life insurance policy. So you want to always remember, you can't take all your cash value out, because then you're doing a full cash surrender. So there's a dance, right? If you need $500 out of your cash value and you have 3,000, absolutely, you can take it out and it's going to come off your death benefit as well. So these are all really good questions for you guys to consider. Yes, you will have cash value in the policy. When is it available, and why isn't it available right away? You have to remember, you are paying for the cost of life insurance up front. And eventually your cash value catches up and far exceeds what you put into that plan. Great question.
I think that's part of the exciting piece is the compound interest that occurs is interest on interest. And so when people begin to understand that the growth of the money and the way that these accounts eventually grow is worth the time. So we've talked about time value and money value and how those come to impact. The younger you are, you have the privilege of saving less and making more over time because your gift at the moment is time. The older you are, you'll have an opportunity to save. However, your time factor is so much smaller that you have to sometimes triple, quadruple, and sometimes 10x what you're putting away compared to if you had started in your early teens or 20s. So these are concepts that we want you guys to be aware of. So part of what is you do have access to this money. However, during the foundation years of your policy, you don't want to disrupt it or touch it. And when you get into a relationship, whether it's a permanent policy or a temporary policy, the relationship starts with, it is a committed relationship. This is not the time to say it's complicated. It's a love-hate. If I don't like you, I'm breaking up and I'm canceling my policy. This is not that type of relationship. This is a committed relationship that you're going to have because it's a promise to yourself. You are certain that you're taking care of yourself. So when people get into financial binds and situations where money is tight, this is the last place you want to cut money. Because as I shared earlier, had it been an expense that we cut in our household, we would have been in deep, deep trouble. Yet, because we chose to continue our policies and have everything when we needed it, it was our line of defense and it was that net that caught us. So, Kristen, I hope that answered your question. Now, Hillary, my question to you is, does everybody qualify for life insurance? Let's say today I'm listening to this chat and say, wow, I'm inspired to take action. I'm going to go apply for this policy and here I go. I'm going to get life insurance. Does everybody, unlike our investment vehicles, is life insurance for everybody? Yay or nay?
Great question. And the short answer is no, not everybody qualifies. One of the main reasons why I tell a lot of individuals who come across me and we start talking about life insurance, they want to go out and get quotes on their own. I'm like, that's great. I empower you to do that. But come back to me and let's discuss a few things. Most importantly, because I do know that not everybody qualifies. So there's certain policies that might be more equipped for you in your specific situation. And I would rather we pursue that route with somebody like an agent who is going to fight for you and help you through that versus letting you stumble and try and figure out and then be denied for a few policies before you understand, hey, you know what? I need an agent. I need somebody who's well versed in this, who does this every day so that they can help me navigate my way through that. So no, not everybody qualifies. And I think it's important for everyone to have an agent that they can discuss these options with, because it will help so much more. It'll be much more efficient. So it'll help you so much more in your family in the long term.
Mm-hmm.
I
So
hope
if
that answers.
yes, of course. So if somebody smokes, are they automatically denied insurance?
No, not at all. And I like to use my mother as a beautiful, perfect example. So, over 10 years ago, my mother was diagnosed with breast cancer. All she had at the time was a critical illness policy that she paid for through her employer. It offered her a max of $20,000, which was super helpful. However, she still had to turn around and take out about $40,000 out of her 401 in order to cover medical bills and medications, additional visits, things like that. And then once she learned, and I came to her, much like you went to your husband, and I said, hey, look, this is a wonderful policy. I think this is something that could benefit you and us in the event. You're not automatically disqualified. She was able to get coverage. They didn't offer her the critical illness or the chronic illness at the time. And it did cost a little bit more, right? Like Carrie was talking about. You're going to pay a little bit more upfront, especially if you have underlying conditions, but it doesn't mean you can't be covered. And then fast forward to she made her 10-year mark, right? She's in remission. She's been in recovery for 10 years. So yay for breast cancer survivors. And we applied for a permanent policy for her this year. And they gave her full access because she had passed their 10-year mark. So she has coverage in the event that she gets cancer again, or she has any sort of chronic illness that comes in. Those two things are now covered. So just because you have an underlying condition, or just because you think it's going to cost you more, you might be right, it might, but you shouldn't deny yourself the opportunity to, if it's too much for you, decline it at that point, right? But still attempt and still try, because it's amazing what it can do for your family in the event of, right? Like Carrie was saying, we don't know the future, but whatever we see in that crystal ball, we want to be prepared for. And you can't be prepared if you never ask the questions. If you never take that route, you will never know. So I just implore everyone to take the route, try, let them tell you no, don't assume the no on yourself.
And here's the reality, you guys, is that, being part of a family unit, we are responsible for ourselves, and then we're responsible for our family unit. So making these decisions are going to help you map out your financial future. However, it's also going to provide that security, the peace of mind. And like I talked about earlier, it's the web that catches you if you fall. Should you fall, you have something to catch you. Otherwise, those falls can be pretty tough. What I'm going to tell you, and this is in the most loving way, for those of you that are ready to take action into finding out whether you qualify for life insurance or not, don't be scared to ask for information. Information and knowledge is free. Taking action into those steps of at least minimum educating yourself and saying, hey, listen, what do I need to know? Would I qualify? Is this something for me or not? What I will tell you is it is a very powerful vehicle that will give you peace of mind, unlike any of our other vehicles. The permanent life insurance comes with living benefits, death benefits, and cash value accumulation. That's the catalog of products when you structure it properly and you get guided. This is not something that you want to cut corners and be cheap about because you're investing it in yourself. Again, you don't want to say, hey, what's the minimum? Can I get in the door? I don't care about using the equipment. That's not how we play. Okay. The other thing with this too is you're looking at protecting yourself in the future and your family. And yet, if the investment into a life insurance, whether it's permanent or a term insurance policy, if the cost of it is too much for you right now, I'll be honest, that's the least of your problems. That means that something has gone absolutely wrong with your finances. There's an imbalance, and that's the conversation that we need to have. Hey, my finances are in such disarray. I need somebody to help me reorganize everything that I have and restructure so that I can purchase life insurance, so that I can go on my dream vacation, so that I can live the life that I want to live from a place of financial liberty and freedom and being able to breathe a little bit different. So we talked about most American households right now are struggling financially, that a $400 expense would break the bank. Replacing tires, getting a new fridge, getting a new washer, or a medical emergency would devastate households across America at the moment because we're not properly prepared with the money we need to take care of our needs. So, these are conversations that I really want us to continue to have and continue to open. We can go into the nitty gritty and super exciting details of how to build life insurance. Like some of the stuff that we talk about, I mean, I can sit and have a cup of coffee or a glass of wine with you and go over like, this is this, this is that, this is that, and that how it works, because I'm so amazed at this vehicle. Not only does it give you the living benefits and the death benefits, yet the exciting part is that cash value accumulation for the permanent policies that allows you to build tax-free money by the time you retire. That's huge, you guys. At the rate that it grows, because it is insured, and how you can structure it to pay you. I think Carrie said they'll carry you until 120 years old. And if you don't live that long, you leave that money as a legacy for your family. Who wouldn't want that? So here's the opportunity to ask the questions that you need to ask that are going to protect you, that are going to protect your family. And I believe that these ladies would be open to coming back and having a conversation. I'd love to have a panel where we have specific questions from our audience that are true to you. The other point is, as Hillary said, not everybody qualifies. Some of the big factors that they look at is your age, your health, and your occupation. Now, if you're out there wrangling crocodiles, forget it, you're out. They're just going to say no. That's too dangerous, right? However, if you're in middle America and have a job where you're low risk, you're fairly healthy, and you're still at an age where you can get, a good quote, we're going to be able to help you out before it's too late. I have older generations that are literally millionaires that are wanting a life policy so that they can secure more of their money and take care of their family, and they don't qualify because their health has deteriorated. That they'll say, hey, listen, I'll give you 200, 300, 400,000, open me a policy. At this point, money cannot buy access or the privilege of what the younger version of them could have purchased had they made a decision when they were still young, healthy, and able to invest this money. So don't let time pass you by. The time factor is a humongous thing to consider. The younger you are, the more qualified and poised you are to create wealth, to manage your wealth, and to have support from wonderful women and men that are in our industry that are legitimately out to create positive impact in your life. Let's not keep finances a secret anymore, you guys. Let's not keep life insurance a secret or being a scary concept. Most of us are underinsured. It's time to step up and create an opportunity for us to live a better quality life and have the right tools to do it. So with that, I'm going to end today because I know we could probably talk about this for hours. Would you ladies agree?
Oh, yeah.
Yeah.
So there's so many concepts. Carrie and Hillary talked about basic concepts, peace of mind, living benefits, death benefits, cash value accumulation, the ability to access funds, leaving a legacy for your family. Don't grieve twice. If your loved ones are hurt or they pass away, you want to make sure that you have the ability to be grounded and think with a straight mind, because at least one of your things is in order, and that would be your finances. You have liquid assets that can be created through these policies. You don't have to die to use this insurance, and it's a way of helping yourself and your family. We also talked about the difference between a term insurance and a permanent insurance, and Hillary talked about qualifications. Not everybody qualifies. So if you are eligible to qualify for one of these plans, ask now, don't wait. And even if you don't have the money, that's something that I want you to consider. Talk to us, reach out to us, and let us know how we can help you restructure your finances, whether it's saving different, getting a side hustle, paying off debt. We have the tools available to us through our company to be able to provide you guys with financial literacy and guidance to take care of most of these aspects when it comes to restructuring your finances and getting in the right lane so that you can be successful in knowing how to build wealth. So from that, ladies, I am so grateful that you guys gave up your time to come and share your knowledge and deposit knowledge into our community. Again, the Elevate Together community is committed to providing positive impact and sharing information. All the information that we shared with you guys today is based on our personal experience and the experience that we have seen throughout the years of our collective careers. And we lovingly bring that to you with the hopes that you will take action into your financial future and create something different. May the legacy of your actions create positive impact in your community, in your household, and in your bank. So, guys, we will see you soon. We appreciate you. Have a blessed week, and we'll see you next time. Thanks,
You
ladies.
guys.
Thanks. Bye.
Bye.